Good evening, everyone, and welcome to tonight's Strategy of the Week presentation titled Supercharging COLT 45. Oftentimes, the simplest change to a stock selection scan can make all the difference in the world. On the 10th of May, Todd Schaefer introduced a technique for cherry-picking shares using a new search called COLT 45. He implemented a methodology which was submitted by a contest winner here in the States, and it worked so well for the US market, he decided to give it a go for the Australian market as well. And as you saw from his presentation, this technique produced an extremely high number of winning trades. Tonight, I'll be tweaking Todd's search ever so slightly to see if we can improve on his results. I'll also compare the performance of Todd's search with the new one in the backtester to illustrate a trading plan you may use going forward. Let's begin. Let me first review the criteria for selecting our share candidates. Our contest winner here in the States supplied us with a little picture of the type of patterns he was looking for when analyzing the graphs. COLT is an acronym that stands for Character of Line Trends, and the 45 reminds us of the idealized 45-degree slope of the three moving average lines. And those three moving average lines are the 10 and the 65-day simple moving average on the stop price, and a 40-day moving average on the relative timing. So in a perfect world, we'd have all three moving averages moving from bottom left to upper right in a nice 45-degree angle. While this is very difficult to find, that's the ideal situation, and that's what we want to look for. To confirm that the stock chart has met the test, he incorporated 5 rules. First, the market must be in a confirmed up situation, and this seems to work very well in conjunction with the slower timing indicators used in the graph layout. Second, the 10-day stop price moving average must be above the 65-day stop price moving average. But more specific than that, both stop price moving averages must be hitting new 3-month highs. The fourth rule was that the 40-day relative timing moving average must be above the value of 1. And finally, the 40-day relative timing moving average must be hitting a new 3-month high. So last month, Todd introduced a new search that included many of these rules for selecting shares. Let me move into the program and show you that search. I'm going to go into the Unisearch tool and open up our cherry picking folder and select COLT 45. He used the default all ORDS parameters and added the following parameters to it. He wanted the stock's 40-day moving average on RT to be greater than 1. He wanted the stock's 40-day moving average on RT to be greater than it was 13 weeks ago or 3 months ago, 40-day moving average on RT. He wanted the 65-day moving average on the stop price. If I pull this over, you could see we're looking at a 65-day moving average on the stop price. We wanted that to be greater than it was 3 months ago. We wanted the 10-day moving average on the stop price to be greater than the 65-day moving average on the stop price, and we also wanted the 10-day moving average on the stop to be greater than it was 13 weeks ago. So instead of needing all 3 moving averages at 3-month highs, he simply wanted all 3 to be higher than they were 3 months ago. Now currently, the ability to have custom moving averages hitting new highs or lows is in development, so it's not available just yet. But what this does, it just gives us a much bigger pond to fish in. And you can then go through the graphs and cherry pick the shares that meet the original set of rules, making sure that all 3 moving averages are at 3-month highs. So Todd demonstrated this technique last month with tremendous success. What I decided to do was to change the sort so that different types of shares came to the top of the list. You can see that the sort here is RT ascending, which brings to the top the shares that are in the strongest downward price trends. I'm going to select COLT 45 SC, which stands for Supercharged, and all I did was I changed the sort. And I sorted by RT times CI, which is Comfort Index, divided by price descending. And what this does is it brings low price shares with the best combination of RT and CI towards the top of the list. So the shares at the top of the list are high-flying, smooth-sailing stocks at discounted prices. It's a very powerful and effective sort. Now, because this is simply a modification to the original Colt 45 search, you will need ProTrader in order to use this new search. If you own ProTrader, it will be in the cherry picking folder in the Unisearch tool. If you do not own it, a link will be provided in tonight's VectorVest views to try it out for 2 weeks for free. And after that 2-week free trial, you may purchase it for $395, which is a $100 discount. Now, ProTrader not only allows you to create custom moving averages on any indicator in the program, it also adds scans on many popular technical analysis indicators such as MACD, stochastics, various moving average crossovers, support and resistance as well. So it's a fantastic tool for technicians out there who are tired of spending hours scrolling through chart after chart looking for potential candidates. I'll scroll back up, close the ProTrader folder, get back to the cherry picking folder. So I took this new sort and I tested the efficacy of it compared to the original Colt 45 RTA sending search. I cherry picked the top 5 shares and followed the same rules. I first went back to the confirmed up signal on the 27th of January of 2012. So I'm going to dial our date back to the 27th of January 2012. And remember, one of the criteria is that the market has to be in a confirmed up situation. So I ran each search on that confirmed up and quick tested the first 5 shares that met the rules. We can see here that the Colt 45 Supercharged did slightly better. It's up 12.51% compared to 10.8%. We did find 2 shares here in the Colt 45 Supercharged that outperformed our best performer in Colt 45. And both have 5 winners and no losers. Now I know this is just one sample size, so I performed the same research over the next 2 confirmed up situations. One on 17th of August of 2012, and I tested that to the subsequent confirmed down on the 1st of November 2012, and the next one on the 19th of December 2012 through the confirmed down on 20th of March 2013. The average of all 3 turns for Colt 45 was 8.34%, and the average for Colt 45 Supercharged was a little bit better. It was 11.8%. I like the fact that this new search did better, so I decided to take both searches and run them through the backtester to see how they compared, simply taking the top 5 stocks from each search. Now, I know this is deviating from the original cherry picking methodology, but let me show you what I came up with. Here's Colt 45 from 27th of January to current. I used the confirmed market calls as my timing system. I'll click on Edit up at the top. I started with a $50,000 portfolio. I used a 20% gain or a 10% loss to exit positions. I tried to maintain a 5-position portfolio, opening all 5 positions at once. And to account for the wash sale rule, I did not want to repurchase the same stock for 31 days after selling it. And I went into cash at the confirmed down signals. And you can see the results were pretty good. 79% winning trades, a 26% gain, and that annualized out at just about 19%, with almost a non-existent drawdown of less than 4%. We made money on every turn, and we are currently still in cash because we are still in a confirmed down situation. I then used the same settings, but this time I tested Colt 45 Supercharged. You can see we almost doubled our performance, up 49%, without giving back much in the way of our maximum drawdown, still just under 5%. We had a very high number of winners, about 68%. And I want you to take a look at this equity curve compared to the previous one. Notice the much smoother overall portfolio performance here compared to the original. You can see we have a much more volatile sawtooth type of equity curve here compared to Colt 45 Supercharged. Now I attribute that to the change in the sort. Now, this search has CI built into the sort, which returns less volatile shares than what RT ascending gives us. So just by looking at these two runs here, you can see by changing the sort, remember the parameters are all the same, but by changing the sort, we can greatly improve our investing results. And the sort really is the key to any successful stock selection scan. I also wanted to test the robustness of this search. We tested 5 shares here with both of these searches. I also wanted to test it with 10 shares, 15 shares, and 20 shares. And I wanted to see the same in terms of the percentage of winners. So here we have a 10 share portfolio. Good results, 36% gain, 65% winners, a 4% drawdown. I also tested 15 shares, 62% winning trades, 28% gain, only a 4% drawdown. And then 20 shares still had a 60% winning trade percentage, 22% gain, and still only a drawdown of less than 5%. And you can see that the lowest percentage of winners was still very high at 60%, and that was with the 20 share portfolio. So on average, you're looking at about a 64% winning trade percentage. Not bad at all. So I hope you can see that by changing the sort, you can significantly improve the performance of a search. But I would definitely suggest to test those changes before you invest your hard-earned money. And lastly, in tonight's VectorVest views, we've provided PDFs of the backtest settings here so that you can recreate these tests yourself, and also so that you have the rules and settings for these trading plans if you decide to implement them yourself going forward. This concludes tonight's Strategy of the Week presentation. Have a great weekend, everyone.